Hello and welcome back everybody to another edition of the Forex Market Preview. Today we're going to talk about dollar pairs, and we're also going to take a look at that Aussie-New Zealand trade that we looked at last week and find out if maybe today, maybe this week is the week to buy that thing on support. All that and more in today's edition of the Forex Market Preview. Okay, everybody, so last week we talked a lot. We talked about several different things. So I want to cover a couple of different things with you. I want to cover the things we covered last week, and then I also want to move into and discuss with you a little bit about a Japanese yen trade that I took in the middle of the week this last week and show you why stop placement is so important. So let's go ahead and just kick it in here on the euro dollar. I'm also recording this on a different software this time, so we're going to see if that improves the quality of the video at all, or allows me to do anything new with it. But if you remember last week, we talked about the bat pattern that was setting up on the euro dollar here, and that bat pattern, we actually ran up into that 886. And remember, on these bat patterns, what we're looking for is that 886 completion. We're looking for the market to reverse somewhere between the previous high and the 886. And as you can see, we ran right up into that 886. Market went just a hair higher than that and now has pulled back off of it. Now the question is, are we going to get down to our initial targets? Our initial targets here are going to come in at the 382 retracement. So if I bring my Fibonacci retracement tool in and I go swing low to swing high, boom, you're going to see, look at that 382 retracement there, but look at where it comes in on structure. Look at that that little lip of structure comes in right at that 382 retracement. That's going to be a very good place to look for our initial targets to come off at. However, we don't know whether or not the market will get all the way down here. Stops need to stay above X, and we need to see that market press all the way down into the 382. Now, given the average true range of this market, I don't know that we will necessarily get there next week. If we see a significant push lower, dollar strength into next week, or into this week, excuse me, we may end up hitting that 382. If not, we may have to wait another week. The opposite could happen. I guess we could go north as well and end up getting stopped out. So we'll just have to wait and see what ends up happening with this. Let's take a look at New Zealand. New Zealand, we actually have a cipher pattern setting up here. I'm going to go ahead and draw that in for you just by grabbing a couple of Fibonacci tools. And again, guys, if you don't understand the patterns, if patterns aren't something that you're real familiar with, or if you haven't ever invested the time to actually learn them, they're extremely powerful. And I have a advanced pattern trading course that's very cheap. I'll put a link underneath this video that you guys can go and check that out. But as you can see, guys, the cipher pattern setting up here, looking to sell the 786 at around 84.44s, stops again above the highs. Now, one of the things that we look at here on the Forex Market Preview is typically higher time frame stuff, that daily chart, the 4-hour chart, so that you guys get an idea of what's going to be happening, where the key turning points may exist into the following or into this week. And I give you some trading ideas, and I tell you a little bit about what I'm looking at. One of the things that you can do is you can always drop down in time frame on anything that we cover here, any of the patterns that I show you, any of the structure levels that I show you. If you cannot trade higher time frames for whatever reason, either your account doesn't allow, you don't have enough money to trade higher time frames to account for the stops, or you cannot reduce your position sizing enough to trade those types of setups, you can take all of this information and just drop it down on time frames. So if you know that we're coming into a significant resistance or support level, and that's a level that you may want to trade around, you can always drop down that time frame and look for a setup on a smaller time frame. Maybe you look for that double bottom on the 60-minute chart, or maybe you look for some consolidation on a 15-minute chart, giving you an indication of where that market may end up rallying, and then you can take some positions in the direction of the underlying trend or in the direction of the potential reversal, while at the same time not taking on as much risk as you would be if you were using it on a daily chart. And again, in my courses and things like that, I cover this in much more detail, but for our purposes here, just understand that everything that we're doing here can be done on a smaller time frame. So New Zealand has that cipher pattern setting up, and if I come down to the pound, here is, again, this the New Zealand trade is really a, if I go back to the New Zealand trade, this is, the market has been rallying here. We've come back. Now the market has hit a point of exhaustion, so we've had a rollover. Now the market is going to rally back up, and when we do, we will most likely break these structure levels. When we break those structure levels, that would technically make us bullish. So we're going to be selling in a bullish market. So that would make this a relatively, this is a counter trend trade. Now, if we go over to the pound, this is a trend continuation trade. If you guys will remember, for the past couple of weeks, we've been talking about this, the ABCD move, the consolidation, and I said, hey, watch for the breakout, either up or down. That's going to signal where the market intends to go next. And as we can see here, the market clearly broke out to the upside. And now we have to look for where are we going to get involved in that trade. And here, one of the main trend continuation trades that I teach is wait for the retracement. So the market has broken out. We're now going to wait for the retracement back down into previous structure resistance. Look left, structure leaves clues. Look for that resistance level as the market pulls back down into that resistance level around 162.45s. You're going to look for you're going to look for an entry, a long opportunity. Now you can do that by simply buying as the market hits 162.50s. You can wait, you can drop down a time frame to maybe a 4-hour or a 60-minute and wait for a double top or a double bottom. There are a multitude of ways you can wait for the market to turn up and print a higher high, higher close. You know, there are several different ways that you can enter this market. But what we want to try and do is give ourselves the least amount of risk with the most amount of reward. And the least amount of risk with the greatest potential for reward will exist somewhere between 162.40 and here around 159.15. So this is actually the area that the market can move in, and I'm not going to go into too much more detail about how we can enter this, or what happens if you can't absorb the risk from here to here. How can you potentially still take advantage of the trades? All of that gets covered in more detail in other training lessons or in other courses that we have. But as the market pulls back down into here, 62.45, 62.50s is going to present a buying opportunity for those of you who are trend continuation traders. Now, let's jump over to the Aussie. Aussie dollar. Look left, structure leaves clues. We ran into support. The market double bottoms against that support level and then rallied off of that. We have now come back down into that level. We haven't quite hit it yet. So one of the major things that traders will do wrong is they will try and buy this up too early. They will see this market start to rally. They'll get really nervous about missing the move, and then they'll end up entering here, and then the market will go ahead and roll over down into the potential reversal zone. You want to wait for this market to press down, or my personal preference is to wait for the market to press down into this zone. It's a narrow zone here on the daily chart between 8,900 and 8,850. So there's only about 50 pips in here of potential reversal zone. If the market is going to reverse, highly likely that it's going to do so in somewhere in here. And the market hasn't come down in there yet, and we're not oversold. So if we're not oversold, we haven't entered the potential reversal zone, this is not the time to be buying up this potential trade, regardless of what it does. It could, skyrocket after today. We don't want to be involved in that trade because it doesn't present us the best possible risk to reward opportunity. So, moving right along. Let's take a look at, before I get into my last thing that I want to talk about, which is the Japanese yen trade, let me scoot over and look at the Aussie-New Zealand trade. Now, guys, this is one we have been looking at. This is the one I said may be the buying opportunity of 2014. We're there. We're sitting on it, okay? If I scroll left, if I consolidate my chart up, and I'm just going to pull over here so you guys can see it a little bit better. It'll take me a minute because it's a long way away, okay? The support level. Here is the previous support level. That's the lowest close. Now, again, if I consolidate this chart way up, and I kind